Neo stock update. This is how you become a trillionaire. Must see this one. Interested to know about what is happening with Neo stock and what is the way to become a trillionaire? Well, welcome back to Stock Market News, you all. We are here today to tell you all the updates about the Neo stock. But before we begin, make sure you subscribe to our channel and click the bell icon so you don't miss out on any of our amazing videos. And let's begin! So, the story of Neo, a Chinese manufacturer of electric vehicles, serves as a lesson for investors in Tesla. If Tesla's rate of volume growth follows a path similar to that of its Chinese competitor, then the same thing that happened to its shares could happen to Tesla. Neo stock has seen a severe decline recently, falling almost 30% since the beginning of the year. The price of the stock's fallen by almost 70% from its all-time high of about $67 and by approximately 60% from its 52-week high of more than $55, which occurred in July. All of this is in spite of a recent improvement. The price of Neo shares, which are currently trading at about $23, hit a low of less than $12 in the middle of May. Neo became public in the United States in 2018, but Wall Street didn't appear to take note of the Chinese electric vehicle company until the following year. In 2020, Neo's value increased by a staggering 1,110% in 2020, with almost all of those gains occurring in the second half of the year alone. The market for electric vehicles was exploding in China, and the company's deliveries were consistently setting new benchmarks for the highest levels ever achieved. Fast forward to the year 2022, and the current price of Neo stock is only one-third of its all-time high. Neo has experienced a loss of momentum over the course of the past year or so for a number of reasons, including geopolitical worries, COVID-19 lockdowns in China, and more scrutiny on foreign companies listed in the United States. However, the corporation is making significant efforts to persuade investors about the future potential of the business by introducing new products, opening new factories, and expanding into new markets. The stock market is paying notice as well, as seen by the recent increase in the company's share price. Is Neo about to go on a new bull run, or may this turn out to be a value trap? The bull and bear arguments for the EV stock are outlined below to assist you in determining whether or not it is worthwhile to place a wager on it. The bull case for Neo: unrivaled potential for market expansion. Neha Chamaria. Neo's shipments and earnings have been erratic over the past few months, but the majority of the problems are due to issues with the supply side rather than issues connected to demand. Specifically, the company is dealing with significant cost pressures and raw material limits, which are having a negative impact on practically every electric vehicle manufacturer, including the industry leader Tesla. In addition to that, operations had to be momentarily halted due to the recent lockdowns that occurred in China. The market for new energy vehicles in China, on the other hand, is showing signs of improvement, and sales of the sector are even projected to reach a record high in June. As Neo brings its production up to full capacity, the company anticipates that its delivery numbers will increase by roughly 80% month over month in June. It's anticipated that the company's new models, the ET5 sedan and the ES7 SUV, would begin contributing to the company's revenue in the second half of the year, making this period of the year significantly more profitable than the first. Neo's current lineup includes 3 SUVs, the ES8, ES6, and EC6, as well as a premium sedan, the ET7, which began production in March and is available for purchase. It is possible that by the end of the year, Neo's quarterly delivery rate will reach 25,000. Additionally, it's making significant headway in Europe, which is the first of its international markets. Above all, the business is getting closer to realizing its aim of introducing an accessible brand to a wide market and anticipates that it will begin making deliveries in 2024. This might be a game changer due to the fact that Neo is currently a leading player in the luxury electric vehicle market in China. Targeting the mass market is the next natural step for Neo to take in order to acquire domination. Given the company's development objectives, I'd prefer to bet on the stock going up from here rather than going down given the choice. Neo's bear case. Do not disregard the potential dangers. According to Howard Smith, the price of a share in Neo has dropped from a peak of more than $60 in January 2021 to a price recently near $22. However, despite such a significant drop in value, it still has a market worth of $37 billion while having negative net earnings. There is a strong possibility that the company might reach that price and even do it really rapidly. In 2022, it is its intention to broaden the scope of its operations in Europe to include Germany, the Netherlands, Sweden, and Denmark, in addition to Norway. But there is no assurance that NIO will be successful in a new market outside of China. This is only one of the dangers associated with acquiring NIO shares. Other factors include the regulatory dangers connected to the trading of Chinese stocks on U.S. exchanges and the more general geopolitical unpredictability. Recently, the organization has been dealing with a number of issues that are more decisive in nature. It's possible that the additional supply chain issues brought on by COVID-19 lockdowns in China weren't company-specific, but the fact remains that they significantly slow down NIO's growth trajectory. The expansion of the corporation has not been entirely halted as a result of these problems. Even after accounting for inflation, the number of vehicles sold in the first quarter was still up 28.5% compared to the same period in the previous year. However, when compared to the previous quarter, their growth was only 3% sequentially. That doesn't rule out the possibility that NIO will turn out to be a profitable investment. However, this underscores the fact that there will always be dangers associated with investing. The current value of NIO increases the possibility that the company's stock will either remain flat or fall in the near future. Its roughly 30% loss since the beginning of the year helped the market price in some of the risk, and it demonstrated how volatile it can be. When making an investment, one should do it with patience in mind, and one should be sure to put any shares that are purchased in the speculative section of their portfolio. It appears that the bulls have the advantage in this situation. NIO is a significant player in the rapidly expanding electric vehicle sector in China. Simply taking this into consideration increases the allure of investing in the automobile manufacturer. NIO, however, is not risk-free, just like the majority of other fledgling businesses operating in a sector that is just getting started. Additionally, it is stock from China, and investing in the stock of foreign corporations in and of itself is a high-risk endeavor. The difference, however, is that NIO already has a firm presence in the market for electric vehicles that is the largest in the world and already entered the European market. It appears that recent initiatives and growth plans are on the right track. If the electric vehicle manufacturer's ambitions are successful, the trip won't be easy, and the stock of NIO may see dramatic price swings, but in the long run, the stock should be very profitable. As a result of the sharp decline in the stock price over the course of the last year or two, NIO may have more potential for growth going forward than for decline. Should you make a $1,000 investment in NIO Inc. right now? You'll want to pay attention to what I have to say before you think about NIO Inc. was not included on the list of the 10 best stocks for investors to purchase right now. That was just released by our prestigious research team, which has won multiple awards for its work. The Motley Fool Stock Advisor, an online investing service that the company has been operating for the past 2 decades, with a record of success that is 3 times better than the market overall. In addition, they believe that there are 10 different equities that are better for buying right now. Well, we hope you enjoyed this video. We don't promote any particular stock, it is just for gaining knowledge. If you found it informative, please do like the video and subscribe to the channel, and make sure you hit the bell icon too, and that'll alert you when we have new updates on our channel. We hope you have a great rest of your day. We thank you so much for watching, and we'll see you in the next video.